So today at Global Stock Portfolios, we're going to look into value stocks and describe what is a value stock. So after a description of what a value stock is, we're going to look into ways to calculate and estimate whether a stock is a value stock or not. And we're going to look into the valuation of value stocks and why value stocks have an upside. And finally, we're going to check into our portfolio for the UK in 2017. The performance of this portfolio is very interesting. So generally speaking, a value stock is a stock with a relative low PER. PER being the price earnings ratio, also known as the PE ratio, or you can write it in several ways, so P/E ratio, where the price is the latest stock price or share price that is known to us, and earnings, also written as EPS, is the earnings per share. Other metrics can be used to determine whether a stock is a value stock. Among them, low price to book value, low price to sales, low price to cash flow, and high dividend yield. Well, the definition of these metrics is given in this slide. It's not very important to look into the definition. You just need to know that there are several ways to estimate whether a stock is a value stock. In this table, we have an example of how the PER is calculated for a French company, Gecina. And on the left-hand side, you have three columns, which are the past years, with figures which are sure because these are published. They come from the published results of the company. On the right-hand side, you have three columns which are estimates. These estimates, they come from analysts. And although they look very full figures, they're only estimations, so there shouldn't be too much accuracy attached to them. But you see in the first red column, you have the year 2017. So even if we give data for 2017, this is an estimation. So to calculate the PER, we need the earnings per share, the EPS. So this EPS is basically a very important data, but it is estimated. And that's how we get the price earning ratio, dividing the estimated EPS by the latest stock price for the company. So who gives the estimates for the earnings per share? Well, earnings are estimated by analysts. They give an estimation, and these estimations are subject to revision. So when you see the figure, well, usually the figure is an average of the several, not predictions, but estimations by several analysts. So it's not a sure thing, and these estimates can vary, usually will vary during the year. So although in a table, the EPS or the price earning ratio may look like a sure data, it is not. It is an estimation, and it's not very well stated in documents. So now we know what value stocks are, but we want to look into their real value. How could they be valuated? How could we estimate whether these value stocks are at the right price or they are underpriced? First, assets companies can be valued using several methods, among them a capitalization rate, discounted cash flows, or using multiples for various ratios. Usually you use an industry average. We would all like to do this exercise for all the stocks that we meet and where we could invest, but we don't have time to do that. I have here at Global Portfolio, well, we look into basically all the markets in the world. We don't have time to look into the valuation of each company. But that's not very important. When you look into it, you realize that value stocks are often valued as if their business did not grow at all. very often also value stocks belong to boring sectors. They are really overlooked by fund managers. And well, very often also they show significant cash flows, but they have very little free cash flows because they have capital expenditures and it takes all their available cash flow. So there's not much spare cash flow to spend. Also important for these value stocks is the fact that these stocks are difficult to buy for a large fund because very often they have a small market capitalization. And second, there's no hype attached to these stocks, so sometimes it's difficult to explain to your manager why you want to buy this particular stocks, which is absolutely unknown from anyone. So there is an upside to value stocks. Why is it so? Because a slight change in the growth pattern of each of these stocks changes the multiple that can be used in the evaluation process. So it means that a small change will have big impact on the evaluation. Second, they can be eventually taken over because they are cheap, and if they are taken over, well, all of a sudden a big company puts on the table a much higher price to take over this company. Well, they have limited downsides because they have a low price earning ratio, so they are not overvalued, they are relatively underpriced. To finish with this slide, we have a study that looks into the fate of low price earning ratio stocks, and it looks into details over several years, and it looks like the combination of small market cap plus low price earning ratio is a good combination to get a better return of your portfolio. So the reference of this study will be available in the comments. Are value stocks interesting for your portfolio? Well, choosing value stocks alone is not enough. Here at Global Stock Portfolios, we use a filtering process to select our stocks in 13 different global markets. And value, relatively low value, is only one step of the process. We select the stocks at the beginning of the year and we keep them for a year. So our strategy is to buy all the stocks of these 13 portfolios to limit our risk, and we do carry only value stocks. So let's concentrate on our portfolio for the UK for 2017 and the latest results. As we said before, this portfolio is selected using a filtering system, and value, relatively low value, is one step of this filtering process. What we can see on this graph is that the portfolio has been behaving very well in 2017, and even after the July results, which were already very good, the value of this portfolio is still increased over the last 2 months, while the index, the FTSE 100, which is the benchmark for this market itself, has gone down. So our performance is very good this year. So this was our short introduction of value stocks, and thank you for your attention.